Welcome. Thanks for stopping by. I'm assuming you're at least a little bit surprised, like myself, that the stock market has bounced back from the March lows and that quite a lot of stocks are at their all-time highs. You may be wondering, how do I continue to invest and trade in stocks but protect myself in case the market drops again? Well, you're not alone. I think about this as well, and a lot of my friends and family have reached out to me knowing that I have 20 years of experience in finance and accounting and over 20 years in trading stocks and options. The answer is there are many ways to achieve this with stock options. This video will go over just one of these methods. Before getting into the method, I wanted to go over the goals of my channel. As you can imply from the name, one of the goals is stress-free investing and trading. I have a full-time job, and I assume many of you have full or part-time jobs and responsibilities. I would not want to, and I assume many of us don't, want to be glued to a screen staring at quotes for hours each day. And probably, like you, I would prefer to worry as little as possible over my positions. This is a goal, so I don't trade penny stocks, I limit my risk, and I rarely trade in and out of positions on the same day. The second goal is to provide actionable ideas. That is, the trades can be realistically taken because there is a reasonable amount of time to get into the trade. Also, the ideas should be available in advance, as providing trades and results after the fact is not helpful to you or anyone, including myself. Providing ideas after the fact may also reinforce bad strategies that won't work over the course of multiple trades. The last overall goal is to provide follow-up on trades. As options expire, this provides many opportunities to revisit how the trades resolved. Hopefully most of them are profitable. That would be nice. But regardless, it will be an educational experience to see how the strategies worked in various situations. And before I go on, I have to remind you that this video and channel is for information and entertainment purposes only and should not be construed as investment advice or as a recommendation. Please do your own research before making any trades. With so many channels on stocks, what's different about this one? I saw a lack to do all of the following, which is why I decided to set up this channel. I will be highlighting option strategy setups. Other channels do a good enough job providing research and a good bull or bear thesis. However, there's a lack of channels that highlight specific trading opportunities, especially as it relates to options. Also, as I will be focused on options, this provides the opportunity to revisit how the ideas turned out. First, this means the videos in this channel will not be going over the same stock again and again. And secondly, the channel will not highlight a trade idea and not actually revisit how it went. There should be some accountability, so I will revisit the trades and ideas, good or bad. I also plan on putting these trades in a real money portfolio and tracking it, so that you and I will see how the strategies panned out. Lastly, as my desire is to not watch the market day to day, my long-term goal is to set up a sophisticated trading bot for ES SPY futures. I will document that journey here as well. So getting back to the concern, how would I invest in these high flyer stocks? Amazon, Tesla, and even gold are at or near all-time highs. There is a definite risk of a pullback or correction. So how would you limit your downside if you wanted to invest in these quality companies and assets? One way is through a bull vertical option spread. Before going on, I'm going to assume you have a basic understanding of options, that you have the required options level approval for your account. I don't want to make this video longer than it already is, so let me know if you have any questions in the comments and I'll do my best to answer your questions. So why would a vertical option spread make sense for these types of stocks? Well, if your expectation is that these stocks will continue to go up, but not exponentially, and believe the downside risk could be significant, then this option strategy will work well for this. From the chart, you can see that the upside and downside are capped. You can adjust how much upside benefit and downside risk you want to take. We'll go over this in the next slide. Lastly, this method is great for smaller accounts, as the margin requirements to get into the trade are closely based on the amount of risk you want to take. Since your loss is capped, the brokerage margin requirements are accordingly low. We will go over this as well. The following are two examples of vertical option spreads. Both are bullish strategies. Max profit will be achieved if at expiration the share price of Boeing is at $167.50 or greater, and for Amazon at $31.40 or greater. As you can see, I entered into the Boeing position on Monday, August 3rd, and was able to only risk 171 to potentially make a profit of 329 because the share price at the time was below 160. To achieve max profit, the share price would need to rise above 167.50 by the time of expiration. However, if the price had not moved and continued to be below 160 or even under 162.50, I would have incurred the max loss of 171. To note, if Boeing was trading at the midpoint of the two strikes, that is $165, when I entered into the vertical option spread, I would likely need to risk 250 to make a profit of 250. We talked about margin requirements earlier. For these two trades, Amazon and Boeing, it is about $500. It's basically the difference between the two strikes multiplied by 100. Please check with your broker as requirements may vary slightly. So as you can see, the Boeing trade was simply a buy of a call and a sell of a call. Let's go over a current example. I'm using the Ameritrade app to show this. Go to the option order entry form, select BA. You'll see that the current share price is 170. Let's select buy to open the 167.50 call and sell to open the 172.50 call. It's at the midpoint, so my limit order is to risk 250 to profit 250. The Boeing example had an expiration of August 14th, but what if you wanted to close out your trade early? Here's how that would be done. Go to your option order screen and basically do the reverse. Sell the 167.50 call and purchase the 172.50 call. Make sure it's a sell to close and a buy to close. Once you have that set up, make sure it's a net credit, not a net debit, as the value of the call that you're selling is worth more than the one that you're buying. In our example, we're going to use a limit order of 380, and if both trades execute, you basically have a profit of 130. However, if you're confident at expiration that the share price will be over the higher strike, just don't do anything and let the options be assigned. This will result in max profit. A general tip: use limit orders on your spread trades and bargain shop on the price. You might get lucky and a trade may execute, and that will help your returns. I've used E-Trade, TD Ameritrade, and Interactive Brokers, and they all work great for spread trades. As the strategy is usually an all or none, it should comprise a small part of your portfolio. Please do your own research before making any trades. Okay guys, this is my first video, so thanks for bearing with me to the end. The video and audio quality will get better, I promise. In thinking about my next video, I want to leverage off this one and show you how you can make multiple times your money with spread trades in certain situations. I have a recent example with my Amazon trade where I only risked $200 to make $1,700. I also want to put out a video on how to earn money over time relatively safely, whether a stock goes up or down, as long as it doesn't tank by, let's say, 30 to 40%. So the probability of profit is pretty high. I also want to go over leaps and diagonal option trades. These will work well in the current frothy market, and best of all, it's somewhat worry-free. There are also some other video ideas that you can see on this slide. Let me know if there's anything especially of interest to you. Lastly, I want to say I hope you all got something out of this video and will benefit from my future videos. If you like this video, please hit the like button and subscribe. Thank you.